Hello everybody, uh, creating this video to explain about real estate syndication, especially with VVF Bhoomi. VVF Bhoomi is a platform that we have created from VVF AgTech. VVF is Vallem Vaari Farms, and the whole idea is that individuals with small amount of money can invest into larger deals. Irrespective of the money that individuals would have, it's always better to spread the risks into multiple projects. That's why we created this VVF Bhoomi as a platform wherein individual investors can put up in smaller amounts of money into multiple projects, so that different projects have different risk appetite and different growth patterns, so they can take advantage of multiple investments into different projects. Think of a situation where if you have $50,000 to invest, instead of putting $50,000 into one real estate land, it could be farmland or it could be anything, you could invest $25,000 into multiple different farmlands. For that to happen, you need to form a group with set of friends or people, and all of you together should get into an agreement and structure a deal and go ahead and buy the land. So there'll always be question on who will take the lead, what's the interest for the person who takes the lead, whether the person has an experience or not. To answer all these questions, we have created VVF Bhoomi with a proper structure. We have an LLC structure, we have general partner, we have a limited partner, and we work with SEC attorneys. SEC is a Security Exchange Commission, and it's very important to structure the deals in accordance to Security Exchange Commission guidelines. Otherwise, there would be serious repercussions for anybody who's structuring these deals. It's not just a LLC structure, and it's not just an operating agreement. Whenever you sell security, let's talk about what is the security. When you're taking money from somebody saying that with this money we will do this and this will happen and this is what you will get, this is a promise being made. Whenever you as an individual does this, you are selling a security. This has to be registered with SEC, and otherwise there would be serious repercussions. That's where we work with security attorneys to register these deals with SEC and make a proper structure. At the same time, when you have multiple people participating in these deals, it's very important for them to get onboarded onto the deal by providing their social security number and many information that are private. So you need to have a website that enables all this. You need to be able to pick up money from them into a LLC bank account, and you need to be able to give K1 at the end of every year, because they all become limited partners. To enable all this, we have created the platform, and our platform helps with individuals to invest smaller amounts of money by a structured way of website, which is backed up by SEC structured or SEC attorneys documentation. And we all talk about different methods on how you will get the money back. One has to really understand that the investments are subject to market risks. There is no quick rich scheme. You will all get money back when the land appreciates. You will lose the money if the land doesn't appreciate or depreciates. That's the reason these investments are only for sophisticated investors. If anybody is thinking that by putting $100 you will get $500, this is not the case. And one has to be cognizant of the facts that the investments you may lose these investments. And if somebody tells you that there is a guaranteed return, you need to think twice on the promises that are being made. The very important term in real estate syndication is the hurdles. While it may sound to be a negative term, hurdle is nothing but you as an investor, when you put in the money, what is the preferred return? Preferred return doesn't mean guaranteed return. There is no guarantee in investments. If there is an appreciation, when you get the money back, what is the minimum preferred return that you would get before the general partner, the person who's structuring the deal, gets their share? That's called a hurdle. In general, the hurdles are like 8% annualized return that goes to the limited partner first, and then there is a 70% split, 70-30% split, which means that after 8% annualized return, the general partner gets a 30% share on the profit, the investor gets 70% share in the profit. This is for up to a percentage of 15. After 15, the split would be 50-50. Let's take an example. You invested $100. There is an appreciation and you received $100 of appreciation, which is 100% growth. This happened in 5 years, which means it's a 20% year-on-year return. Let's talk from the 100% return perspective. When the general partner promised 8% annualized preferred return, 8% into 5 is 40%. So out of 100%, first 40% goes to you as an investor. After 40, up to 75%, it's 70-30 split. Up to 35, 70% is 24.5. And after 75, the remaining 25, it's a 50-50 split, which means out of 25%, 12.5% goes to you and 12.5 goes to the general partner. So you got first 40%, next 24.5, next 12.5. That translates to 77% out of the 100% appreciation. Remaining 23% goes to the general partner. Why should it go to the general partner? Because general partner has created the structure, enabled the platform, and brought in multiple investors who are coming with smaller amounts of investment. That's the reason they will take the 23% of this. This 23% is just an example with assumption of 100% appreciation. If the appreciation is less, apply the same formula, you will get the details of how much you will get and how much general partner would get. If the appreciation is more, like a 400%, apply the same formula, you will know what it means by that. All the calculations are part of an Excel whenever we give it to you, and you can make a judgment based on that. And whenever you are getting into real estate syndication, always look at what you are getting rather than how general partner is benefiting from all this. The general partner is structuring these deals only because there is a benefit. Otherwise, they would not be deals structured like this. Look at how much money you are putting in and how much you are getting back over a period of time, and what are the risks involved. Whenever you look into offerings, look at the lands around that area. How much would you be able to buy those lands on your own or a group of your friends? If yes, please go ahead and buy that. Then you wouldn't need a platform like this. If you do not want to join with your friends or want to take the burden of structuring the deal by yourself and you wanted to be part of an existing platform, be prepared to pay the general partner's share of percentage, and also look at the lands. There may be lands that are bought at a lesser price in the past. That's because general partner have collected the money from their investors and bought the land at a lower price and maybe selling at a higher price at this point. That's the natural appreciation of the land. And when you compare what you're paying, compare with the current pricing, not with the pricing at which the general partner have bought the land in the past. These scenarios or the structures are not easy for everybody to understand because we are all typically used to buying the rental homes or a home on our own, or maybe a couple of people coming together. But when you're getting into the larger syndications, these are all the very common topics. Browse through YouTube for videos on real estate syndication. That's where you will get the appreciation of what's happening in the market. For any questions, feel free to contact us, and I'm happy to answer any questions that you may have and explain the real estate syndications. We are doing the syndications in the area of farming so that everybody can invest into farmland and gets benefited with the appreciation. Thank you so much, and we all hope that VVF Bhoomi would become a large farmland syndication platform. Thank you.